Excellent, excellent. Wow, great information for entrepreneurs, whether they're startups that need funding or mature businesses in need of capital to scale up. Before we continue our program, a quick housekeeping note. Pay attention. I encourage all of you to follow up on all of the invaluable advice you're getting today. And don't forget to go to the Event Hub to download the additional resources we have reserved just for you. Our next session will tackle how you can increase your business's bottom line while improving the lives of the disadvantaged. Black Enterprise EVP and Chief Content Officer Derek Dingle speaks with two successful business innovators and social impact leaders.
Thanks, Ramon. I'm extremely excited that you can join us for this session, Designing Innovative Business Models to Serve Our Communities. Today, I talk with two business innovators who have created distinct game-changing firms that demonstrate you can do well by doing good. Let me introduce them. First, Martin Muoto is CEO and managing partner of SoLa Impact Funds. After years of investing in real estate in South LA, he launched SoLa's Opportunity Zone Fund to focus on improving lives through affordable housing and economic development. He grew his two-person operation into one of the nation's fastest growing minority-led companies. Wole Coaxum is founder and CEO of Mobility Capital Finance, better known as MoCaFi. MoCaFi enables Blacks in financially disadvantaged communities to obtain low-cost services, build credit, and gain access to capital. Initially self-funded, his firm recently completed a $12 million round of financing to offer mobile banking services to hundreds of Black Americans. Martin, Wole, thank you for joining us.
Derek, great to be here.
It's always great to see you, Derek.
Likewise, likewise. So what I'm going to do is I'm going to start with you, Wole. Wole, you are the CEO of Mobility Capital Finance, or better known as MoCaFi, which is appropriately named. Just wanted to start off, and this is going to be the question for both of you. You're in banking. You know, you're banking executive for years. And then you decided to branch off into entrepreneurship with this venture. So share with us your transition from your career trajectory to your entrepreneurial leanings.
It's a great question. And again, it's a real privilege to be a part of this conversation today. You know, for me, I was very fortunate in my career to have the opportunity to work with several terrific financial services executives, starting back with Sandy Weil and Jamie Dimon when they were at a company called Commercial Credit that became Citigroup. I was there for 10 years and there had an opportunity to learn different aspects of financial services and the impact that financial services can have on different communities. In fact, there was the Black Enterprise Fund that was established during my time at Citigroup. And that was something I was very excited about, just to be able to see that grow and see the impact that real focus on investing in Black communities, and that was in the 90s, could have. And it was a part of sort of my inspiration for MoCaFi. And so after 10 years at Citigroup, I went on to Willis, which is an insurance broker, and learned how to manage people and became the chief operating officer of North America. And then after that, went to JP Morgan for the next 8 or 9 years. And I had my George Floyd moment after the death of Michael Brown. And really that struck me and said, you know, we as a community are fighting the right fight around a social justice agenda. But the question is, what's the economic justice agenda that goes along with that to ensure that we're moving our community forward? And seeing things like the Black Enterprise Fund and seeing others, I said, you know what, let me take my experience and see if I can move forward by taking advantage of the technology that exists at that time and create a new form of banking to address the fact that 55% of African Americans are unbanked or underbanked. And so with that, started MoCaFi. And the thought process is, let's try to do 4 things. And we'll talk about it in a little more detail. But one is, how do you get people bank accounts? And there's so much value there. How do you then help people build their credit? Because so many of us are not reflected properly in our credit score. I heard a statistic today, 17% of people in Detroit have a credit score of less than 720. Now, it's hard to buy a home, and I don't, with the credit score less than 720, and I don't believe that only 17% of Detroit residents are 700 credit score or better. The number is much higher than that, but we need to create systems to change that. So then from there, after you build your credit, we try to figure out, how do you get people to buy homes or get into entrepreneurship as a way to close the wealth gap. And so the journey for me was taking that risk, going out on faith with a good idea, with the knowledge that there's a significant market opportunity, and the conviction that we need all of us thinking about how to move our community forward. And my small contribution to that was starting MoCaFi as a way to close the racial wealth gap, and just going out on faith with the hope that it would be successful. And it was that sort of inspiration that enabled me to go out on faith, if you will, in this journey to be where we are today. And I look forward to sharing more with you about that as we have our conversation.
Sure, sure. I wanted to get, Martin, your view. You come from tech, and you decided to look at, real estate, housing as a model to serve our communities and also to build a business. Share with us how that came about. What was the aha moment that said, yes, this is the area that I want to go into. I want to plant my flag, not only to build a business, but to impact, underserved communities.
Derek, similar to Wole, I think that we all had some great opportunities in our career, but I always remind, especially budding entrepreneurs, that your career is never drawn with a ruler. It's a zigzag. It goes back and forth. You take some side steps, you move forward, you move backwards. And so I wish I could say I had this incredible vision or divine insight, but it really evolved over the years. I was very fortunate to spend the first part of my career in venture capital, working with General Atlantic Partners, and a spinoff of General Atlantic exposed me to a whole new way of thinking, a whole new way of boldness and bold ideas, and really changing and disrupting industries. I came out to Los Angeles in 2004 after spending many years in venture, because I wanted to be more on the operating side. I always had a passion to be close to the companies we invested in, and started investing in real estate on nights and weekends, and invested in several areas of Los Angeles, but really wanted to find a niche that was uniquely focused on Black and Brown communities, partly because I thought there was a great opportunity there, partly because I have an unwritten rule that says, go where you're celebrated, not where you're tolerated. So there are folks that were investing in Brentwood and Santa Monica and other areas, but I decided I wanted to invest in South Central Los Angeles, Compton, Watts. A lot of the folks that I spoke to, brokers, developers, and what have you, said, where are you investing again? And their perspective was, wow, you're going to have high delinquencies, you're going to have evictions, you're going to be dealing with drug dealers and pimps. And I said, really? And the simple investment thesis has always been the vast majority of folks are good, hardworking people that want a safe place for their kids. But the stigma that surrounds areas that are predominantly Black and Brown, areas like the south side of Chicago, the West Philadelphia many years ago, but certainly South LA, even today are 30, 40 years old. The stigma persists, and it shouldn't. And so I started in the mid 2000s using only my own money, bought about 10 buildings. I always say that it's the most honest way to learn a new industry and a business is when you're counting your own pennies and nickels and dimes, and did everything myself, meaning I was doing open houses, I was writing ads for Craigslist, I was collecting rent, made a lot of mistakes, learned a lot. And really that was the genesis of what has become SoLa Impact. So a lot of great mentors and contacts along the way, but always there was an underlying theme that said, I think you can make very good returns, but equally, I think you can invest in a way that is intentional, impactful, and pragmatic, and where the community and the tenants that you invest in really see the benefits of those investments. So that was the underlying genesis of SoLa Impact. And looking back, it looked like there was some insight, but it was really the Darwinian process throughout.
Well, what it comes to in all entrepreneurship is one of vision, one of seeing of mission fulfilling a need, and then, as you talked about, Wole, going out on faith. Now, both of you put your own capital into it. Share that journey, and because this is for the Small Business Summit. So part of this, we want to talk to small business owners about how to develop a plan, a plausible plan. Faith is great, but it has to be backed by works. So the work is to have a solid plan to gain the backing. So, you had ventures, and Martin, you talked about, the comments that you got that could have easily dissuaded someone who didn't really have, a commitment to, your charge. How did you go about building confidence, gaining other investors, and then building that from individual investors to institutional investors? And then, Martin, I'll start with you to follow through with, the SoLa story. And then Wole, I'd like you to talk about your experience with MoCaFi.
In my experience, there are no shortcuts. And I think for entrepreneurs, you should be realistic about putting in your 10,000 hours, right? Putting in your 10,000 hours to really get the experience, to really learn the business. I remember when I first started looking in South LA and Compton and Watts, I came up with about 24 listings, and I went out to visit those properties. Before I made my first investment in South LA, I visited over 100 properties. And when I say I visited them, the listing would say, do not bother the tenants. I would talk to the tenants. I'd knock on doors. I would speak to people. It said, do not walk the properties. I'd get out of my car. I'd walk around. And you get, I really expanded my knowledge of the community. But really, these are people, and getting to know your market takes a lot of time and effort. In hindsight, I probably could have made 90 of those 100 investments and done fairly well. But before I made my first investment, I spent the time and did the research and really dug deep. I then, as I mentioned, bought about 10 properties using my own capital. And investors, your business partners will respect when you've put your money and your neck on the line, and you've done that on, you've sweated it out, you've learned all the mistakes that you can make. Probably similar to Wole, I was very fortunate in that I had worked alongside of folks that had done very well. And so when I went back to some of the partners I worked with at General Atlantic and other firms, they were thrilled about investing in my first fund, which was in 2014. So I think the takeaways is that you got to really put in the time, build the track record, really learn the business ground up, and that gives you the platform on which you can start to attract outside capital.
Yeah.
But the opportunity zone model helped you, fuel the growth in terms of capital investment, as well as to create a solid platform for your fund. Is that correct?
That's right. Our third fund was an opportunity zone fund. Our first two were real estate funds. This was before the opportunity zone model got introduced in 2017, 2018. We launched our opportunity zone fund, which was our third fund, in 2019. We joke that the opportunity zone landed on us. We didn't land on the opportunity zone. So these are areas that we'd been investing in for many years with a very similar model, doing a tremendous amount of rehab, ensuring that we were serving the community and serving the tenants, and then learned about the opportunity zone initiative. In fact, one of the folks that helped write the legislation visited us and said, this was literally tailor-made for what you're doing. And so while at some levels, the opportunity zone program has had its controversy, it really was designed in a very bipartisan way to try to incentivize folks to invest in low-income communities, and it's done a mixed job of doing that, but certainly is something that we've been very fortunate to take advantage of.
Okay, so Wole, looking at your situation, having been in banking, with all the contacts that you had, getting that, going from individual to institutional must have been obviously I'm not going to say easy because, nothing is easy as an entrepreneur, but it may have not been as challenging as some entrepreneurs because, you knew the financing arena and you had the contacts. Is that, am I, under downplaying the amount of challenge that you had in terms of gaining financing?
I'm still Black, and so so our financing. So the short answer is it's not all the contacts and relationships in the world are not enough to overcome sort of what Martin was talking about, right? You got to do the work, you got to be in the dirt, you got to have a real good understanding, because at the end of the day, relationships or no relationships, people are investing in people and they're investing in good ideas. And you've got to make sure that you are a person of integrity, regardless of whatever kind of business that you want to start. People are investing in you. And if they believe that you are a person that does what he or she says they're going to do, follows up, is truthful in your business dealings, and is always trying to do the right thing, that is a table stake, quite frankly, for raising money and raising other people's money. I think the point around, we started, I put in the first dollar, which is not dissimilar from most entrepreneurial journeys. And I think especially as you're talking about, at least in my case, and I think it's also true in the case with Martin as well, when you're reimagining a framework and providing services to folks where other businesses have walked away or said, there's a status quo there. And in our case, it's the check cashers, the pawn shops, the payday lenders. The people like, that's there for a reason. It's a $185 billion industry, disproportionately impacting Black and brown communities. That you want to change that. Like, we haven't seen that before. And I think that's the other thing around investing, particularly in traditional VC, venture capital, private equity. It's a bunch of pattern matching, which is why so much capital goes to entrepreneurs from 6 schools, white entrepreneurs, because that's a pattern people have seen before. But when you come and say, hey, I want to create a new model of investment in housing in communities of color, I want to come up with new models of or creating banking services in communities of color, that gives people pause. Haven't seen that before, hard to pattern match. I'll wait and see how that goes before I put my dollar in it. And oh, by the way, let me tell you all the 5 reasons, and I'll add another 5. So there are 10 reasons why that's not going to work. Again, because people haven't seen it before. Our journey was one, I invested personally. People saw that commitment. At the same time, there were people around me who said, you know what, not sure it's going to work, but you know, Wole, you got a track record of excellence. I like the vision, and I'm willing to take a shot because I'm not quite sure if it's going to work or not, but I trust you. So let's go down that path. And with that path, we were able to raise $3 million from friends and family. I like to joke it was enough money to keep the business going, but not enough money to ruin a friendship. From that base, we were able to do the kinds of experimenting that happens in this particular instance of product market fit. Do you have, it's one thing to, oh, I'm going to build this thing and everyone's going to come. No, the market's talking to you all the time. And so as an entrepreneur, you've got to think about, is what I'm building solving a real issue that's going to attract large numbers of people? And that takes some experimentation. And I think that it's important to get something in the market as spend as little money as possible, get as much feedback as you can in terms of adoptability and customer satisfaction, keep the good stuff and do more of that and get rid of the bad stuff quickly. Once you're able to do that, then we're able to go to institutional investors and say, look, we've got a frame. We've done some of the heavy lifting and the learnings. Now we need to position ourselves to scale this thing and grow. And so that is when we brought institutional capital. And then the next form of institutional capital, and we raised $4 million in that form of institutional capital. Then the next wave of institutional capital came and said, okay, you've built out this infrastructure. Now we really want to scale it. And so I think the key, so two important ideas from a fundraising perspective. One is you want to, at least the way I think about it, is you want to raise money at inflection points. If you're at an inflection point where additional capital will allow you to move to the next level, that's a good time to raise money. And it's a good story in terms of investors being able to make the case to their partners or whomever for investment decisions. And the other thing is that time and money is like oxygen for an entrepreneur. Because if you don't have either of those two things, you're dead. And so it's really important to think through how you manage your time and how you manage your money to make sure that the business has enough runway to achieve the goals that you have in mind for that business. And I think the other piece, and it's a word I didn't really like that much, which is pivoting. You gotta, people use that word, you gotta pivot. I didn't like it because that leads to an impression that says you're just going from one thing to another without real purpose. But the reality is the market is talking to you. And if you put something out and it doesn't get the kind of reception you want, that's okay. You just have to make a shift or a pivot so you can move and get the momentum of the market. So anyway, just a couple things to think about from our experience.
Yeah, I think that's, great. But, in terms of being pioneers and groundbreakers, you have the two challenges. One challenge of, the investors or people who are putting money that believe in you, but ultimately, how do you make your money? And then two, the skepticism from who you're serving in terms of not seeing the models before. So Martin, was that the same case with you, in terms of looking at the doubters and, sharing with them the larger picture in terms of how SoLa Impact is going to have an impact across the board?
In some degrees, yes, and some degrees, no. So I think as Wole pointed out, both of us are obviously people of color leading organizations, which sounds great today, but historically has not been, you don't get invited into the secret room where it happens. We're also both chosen to serve low-income communities, which unfortunately have a high correlation to Black and Brown communities. So that's two things. And third is that we also designed our companies to be double bottom line or social impact, call it what you will, companies that are ultimately serving the community in some way. And I think that when you speak to institutional investors, particularly, it may be 3 strikes, right? Now folks remind me, oh, things have changed over the last year with George Floyd and the Black Lives Movement. Suddenly it is great to be a Black entrepreneur. And there's some truth to that. I think we are all recognizing that the last year has brought this to the forefront, but we're not sure if it's a moment or a movement, right? And so we hope it's a movement and we hope it's sustainable. But at the end of the day, you have to start with a couple of underlying premises that are very different than most people, and particularly most people that are not of color. I've always said, if I have to work twice as hard to get the same results, I'm prepared to do that. And as Black and brown and women-led and non-mainstream entrepreneurs, you have to take that mindset. You have to, it shouldn't be, but it is. And if that's the case, you also have to approach it without bitterness, right? It's the system is what it is. And so I think Wole would say the same, was we came prepared. I've always said, if I have to work twice as hard to get the same results, I'm prepared to do that. I think the second is you have to let people show up with their actions and with their capital. Right now, there's a tremendous amount of rhetoric around supporting Black and brown diverse managers and entrepreneurs and funds and so on. And I'm hoping, and I think that we believe that there are really well-intentioned companies that are trying to do the right thing, and we both have to let them show up and also hold them accountable. But that mindset and that approach, and then fundamentally, you have to have a business model that works. In some respects, as we launched the Black Impact Fund, which is our effort to raise up to $1 billion over the next 3 to 5 years to invest exclusively in Black and brown major metropolitan markets, starting primarily in California and expanding to the West Coast. It was a very bold initiative. It is a very bold initiative. We still have some work to do, but we have found some great partners coming alongside of us. But you've got to be able to demonstrate that your business model works independently. It makes investors very good returns. In some respects, when we first launched the fund, we overcorrected for the value of social impact, the focus on ESG and diversity and inclusion. And we found dozens of investors that would be very happy to talk to us. I would joke that a year or 2 years ago, I'd call folks and they'd go, who is it again? It's like, it's Martin Muoto. They're like, who? It's like, so Martin Muoto from SoLa Impact. And they go, put it out 3-5 months. Maybe he'll get tired. And they go, no, it's Black Martin Muoto. They go, oh, it's Black Martin Muoto. Hold on for a second. Hold my calls. I'll take this call. And listen, we're no fools. We'll do, it's a great time. But ultimately, the fact is the business model has to show it produces great returns on its own. And we then sort of recalibrated how we positioned it, because quite frankly, we're not only a for-profit, we're unapologetically a for-profit company, but one that is very intentional about how it invests in the community. But the journey is certainly a long one. And I think that for entrepreneurs, you should be very clear-eyed about the difficulties going in.
Doing the right thing, showing that you have a solid business model and that you can produce the returns to gain the investment. Wole, in terms of your, you just as Martin has been groundbreaking, just in terms of your $12 million Series A financing, where you've partnered with MasterCard and some other institutional investors. Was that a matter of the business model, or was that a matter of this timing, this moment, as we've talked about?
That's a great question. I think it's both, quite frankly. I think the business model is one where, as I described earlier, people got it. That seems to make sense, and we've had some good traction in terms of validating that business model. And again, you want to, I really like what Martin said, you want to go where you're celebrated, not where you're tolerated. It's just, lots of different locations are saying, we want some of this MoCaFi financial services as infrastructure in our communities. And so we had a little bit of tailwind coming into 2020 on that topic. And then at the same time, I think that the awakening, if you will, that some people had in terms of, hey, there are real discrepancies in communities. And I think the COVID impact and the conversation around how COVID was disproportionately impacting communities of color. And then you layer on top of that the murder of George Floyd and other individuals, just changing the conversation, gave real visibility. It sort of said, you know, the work that we had started out doing several years ago, people were sort of coming to where we were. It's sort of like that phrase where Wayne Gretzky would talk about, he doesn't go where the puck is, he goes where the puck is going. We were going to where the puck was going, and other people sort of seemed to catch up. And so I think those two factors, in terms of a business model that had momentum and a broader understanding in terms of different corporations and other investors saying, hey, we want to be a part of how we can impact change. And the MoCaFi model is one that makes a lot of sense. I think that allowed us to be able to raise that money. And someone gave me a great piece of advice. This was in the context of some fundraising that I was doing, but for a not-for-profit, but I think it applies as well in this context as well, which is the size of the ask is equal to the size of the idea, right? And so your ability to make a big ask, whatever that is, has to be based on the size and the scope of the idea. And at the same time, it's got to be a clear, well thought out idea. And just to quote Mike Tyson, you might have the best plan in place until you get punched in the face, and then all bets are off. But you know, you got to at least start with the plan. And if you have the capital behind it, then you can withstand the punch in the face to go on and win the championship, because that's what's required to be a successful entrepreneur.
Well, yeah, both of you have shared some amazing insights into terms of your enterprises, as well as overall what business needs to do. You know, Martin, in terms of what you've done with SoLa Impact, it's now one of the fastest growing businesses. It's been identified as one of the fastest growing minority-owned businesses in the country. Your growth has been amazing, and the fact that, you know, Wole, you've been able to get that institutional capital. Before we leave, just give us and give our entrepreneurs, you know, 3 quick tips on what they need to do to scale up, because both of you started, you know, very small. Martin, 2-man operation. You know, Wole, a force of 1. But talk about, you know, that process of scaling up and what you need to put in place in order to get to the next level. I'll start with you, Martin.
I'd say, you know, in the last 10 years, as we've been doing this, the things that stand out are being bold. As Wole said, there's an inflection point for disruptors in the industry. MoCaFi is certainly one. We're a disruptor as well and going into a traditional industry. So whenever entrepreneurs of any stripe go into something, you've got to be incredibly bold. Equally important, you've got to be laser focused, and being laser focused on the critical success factors in the industry may be very different in different industries, but you've got to be ruthlessly focused on what it takes to be able to really demonstrate your business model and succeed. And I would say the third thing is always surrounding yourself with great people. Very early on, my co-founder, Gray Lusk, and I teamed up, and it's been a great partnership. Our partnership with investors from the likes of General Atlantic and folks at Goldman, folks at Silver Lake, you know, at Oak Tree. There's really good individuals that are incredibly mission aligned. Finding those in your investor base, certainly in your employee base, is critical in getting those people on board, and then never losing sight of the true impact, the true community in which you serve, and always refining how you continue to deliver value to them. We all serve some of the more vulnerable populations in the country. And I think that we both feel very strongly that addressing some of the structural issues, whether it's financing, access to capital, access to housing, access to education, all of these things are the underpinnings of trying to deal with the underlying issue of racial inequality and income inequality. And ultimately, it's something that the country is really grappling with. So I know I speak for both Wole and I when I say we need all the help we can get from partners, from investors, from friends of the fund. And Black Enterprise has been a great contributor to really helping articulate the story and build a platform for folks like us to speak about what we're doing. So incredibly appreciative of that.
Thank you, Martin. Wole, any a parting comment?
Yeah, no, I think I would build on Martin's points, which I agree with all of those. A couple of thoughts come to mind. One, I think as an entrepreneur, you want to just be on top of how you're spending your money, be as frugal as possible, at the same time, get the best product out that you can, and always be listening to the market. Just listen to what your customers are telling you. Listen to what the feedback is, and constantly refine what you're offering to people. That's point one. I think point two is just recognize that it's a journey, not a destination. And it's really important to, if you believe in your idea, if you believe in what your mission, you got to stay true to that and stay focused on it, because there are going to be a lot of moments when you're going to say to yourself, tell me again why I did this, and why am I making these kinds of sacrifices? But for me, before I left JP Morgan, I often thought about this question of what's worse, being unemployed or underemployed. And I believe that being underemployed is worse. And the nice thing about being an entrepreneur is you're overemployed, but it's because of something you're passionate about and excited about. 18-hour days, 20-hour days, it doesn't feel like work, because you're able to really lean in and bring your full self to it. And the final thing I would say is you're keeping an eye on the numbers. You have faith in what you're doing, and always just find the right balance and make sure that you have the right amount of self-care, because the entrepreneurship journey is again one that's over a period of time, and you want to bring your best self, and you got to make sure that you're taking care of yourself from a health perspective, physical and mental health, because over time what you find is you have a lot of people who are counting on you. Your employees are counting on you, your family's counting on you, your investors are counting on you, your customers are counting on you. And you can't, God bless the child that's got his own. So you got to take care of yourself so you can take care of others.
Wole, Martin, thank you for being a part of our Small Business Summit and sharing your journeys, sharing your strategies, and giving our entrepreneurs out there some amazing advice so that they can move their businesses forward. Thank you for being here.
Thank you, Derek. It's been great.
Thanks very much.